Exante data expects the dollar will remain strong in the first half of the new year. Let's bring in currency strategist Jens Nordvig. He is also co-founder and CEO of Market Reader, a Wall Street analysis platform. So your prediction, Jens, welcome and Happy New Year. Your prediction for the dollar for the first half of the year, and will the second half be different, and why?
It's very hard to fight the momentum we have right now because, as was just mentioned, right, U.S. growth is better than growth momentum other places, and the Fed might get on hold. In the next several meetings, we might have a Fed that is just looking to be on hold, while almost all other central banks around the world are looking to cut, right? So that rate differential will go up, certainly against Europe, certainly against China. It's going to go in the dollar's favor. And we still have between 2 and 3% growth, which is pretty decent this far into the cycle. And we have also tariffs, right? Tariffs that will potentially impact, especially the dollar against China. And that's a factor as well. And finally, we have a lot of kind of political risk around the world. We've seen it in South Korea. We've seen it in France, all around the world. Political risk is popping up, right? And relative to that, the dollar looks like a safe bet.
Yeah, so if you look at what's going on in Germany, in France, it is not just the former weaklings of Europe. It is now the strong countries in Europe, Germany and France among them, that seem to be suffering. So what does a stronger dollar, just so we slow down here, what does a stronger dollar portend for American multinationals that do a lot of business, all other things being equal, that do a lot of business in, for example, Europe or in Asia?
Yes, well, I think there's two things. The first is just the translation impact, right? The earnings that these companies have in Europe, and Europe tends to be the most important market for all the tech companies and so forth. They're going to get translated back into a weaker impact on the dollar earnings, right? So that translation impact is there. The second factor, I think, has to do with the tariffs, right? There's a lot of uncertainty about what tariffs will be. Will they be just on China? Could we get global and so forth? And I do think companies that rely on CapEx are potentially going to see a hit, in the sense that a lot of multinationals are just reluctant to make big investments before they know what's happening with tariffs, right? So the tariff fear is actually having an impact on certain types of CapEx related to exports, even before we know what's happening with those tariffs.
Tim?
Hey, Jens, it's Tim. So let's talk levels on the dollar index, which has already moved. The Dixie's, had an 8-9% move, really, in a short amount of time. We're kind of through at least the levels that we hit towards the earlier part of last year. Once we get through that 112 level, do you think we can even retest the highs of where we were a couple years ago?
So let's talk about it in the context of the euro, right? So the euro is at 103 now, and it came back from above 110. And we've had a sizable move for sure. If we continue along the path we've been on for the last couple of months, right, where growth is weak in the Eurozone and so forth, I think it would be logical that we test parity in maybe by the end of the first quarter. But I think the real issue is whether this political risk that's brewing at the core of the Eurozone in Germany, in France, whether that's going to start to feed into bond market instability and create a kind of nonlinearity where it's not just a couple percent, but it's actually a kind of a real tension situation that gives us another 5% on top of those few percent. I think that's a scenario that I worry about a lot, and I think investors should take very seriously. We could be heading into a situation where there's tension right at the core of the Eurozone, which is something we haven't seen before.